Hello, welcome to Better Money Habits. My name is Melanie Toth from Bank of America, and today we're going to discuss some practical tips that will help you put better money habits in place. These tips include making the most of your paycheck, putting together a spending plan, and setting aside emergency funds. Let's go ahead and get started by talking about your paycheck. The first time you ever received a paycheck, were you surprised that the total amount at the top of the paycheck was more than what you actually took home? That's because the gross pay, which is your pay before any deductions are taken out, is higher than your net pay, which is your take home pay, or the amount of money you actually receive. There are two types of deductions that can be taken out for your paycheck. The first are known as mandatory deductions, and these include items such as federal income tax, Social Security tax, and Medicare tax. The next are voluntary deductions, and these are optional that you can choose to pay if your employer offers. This includes health insurance or money taken out to be put into a retirement account. Your take home pay or net pay is your gross pay minus your deductions. Now let's take a minute to review an example of a pay stub. Let's look at this example where you will see you have $1,000 in gross pay on your pay stub. For this example, we're going to say you're in the 12% federal income tax bracket and your state charges you 5% in taxes. You chose not to have any voluntary deductions. So you will see that your take home pay from $1,000 would be $753.50. Remember, your take home pay is the actual amount you'll have to work with for both spending and savings. Now that we've looked at your paycheck, let's discuss financial products. Choosing the right financial product to meet your needs can help you build the right foundation and give you a head start on building better money habits. So let's review two basic types of bank accounts and how they work. The first is a checking account. With a checking account, you will be given a debit card, which will let you access your account directly without going to a bank. You may also receive a PIN, and with that card and that PIN, you can take money out from an ATM and you can pay directly for purchases at many merchants. Many checking accounts also come with a checkbook. Some types of payments, like the rent you have to pay, may require you to write a check. So, whenever you write a check, it's important that you write down the check number, the person or payee of the check, and the amount of the check so you have a record of the funds available in your account. Remember, there are some fees that may be charged for the convenience of a checking account. So, depending on the account, you may be charged a fee for not keeping the minimum balance required, or for using another bank's ATM, or for withdrawing more money than you have in your checking account. The next type of account is a savings account. Savings accounts typically earn you a higher interest than checking accounts do. Savings accounts will limit the number of withdrawals you can make. And while this may seem inconvenient, this limited access can help you meet your savings goals as you won't be tempted to use the money in your savings account for impulse buys. Savings accounts can be linked to your checking account or connected to your checking account so you can easily transfer money to your savings account or out of it if necessary. Setting a regular transfer of even $5 or $10 from your checking to savings can help you establish really good savings habits. Watch out for fees that could be charged with a savings account, such as a fee for not maintaining the minimum balance or if you make too many withdrawals. Now that we've talked about checking and savings accounts, let's review some different ways you can pay for what you buy. The first is cash. The next is a debit card. Remember, track your debit card purchases along with your checks that you write and any other withdrawals that you may make from that account so you avoid taking more money out than you have. A debit card may also offer you some fraud protection as well. The next way that you can pay is with a credit card. While using a credit card is a safe and easy way to build credit, and it could also offer you fraud protection, credit cards must be used responsibly. If you carry a high balance on your credit card, pay late, or only pay the minimum due, you will pay more in interest charges and could even hurt your credit. So, you may need to make sure to use your credit card responsibly, or else that $50 purchase could very quickly turn into a $75 purchase if you're not paying it off monthly. So, now that we've talked about ways that you can pay, let's look at some of the basics of budgeting. Here are some things that you may want to budget for, or perhaps you've already started. The first is for emergencies. Without an emergency fund in place, an unexpected expense could really force you into debt. A second item you may want to budget for is paying down debt. As we discussed earlier, carrying debt, such as a credit card balance, can be costly. And if not managed correctly, it can get in the way of your savings efforts, making it challenging to purchase the things you need or could impact your credit. You may also want to budget for short term goals. Things that you want to save for could include a security deposit on a new apartment, a vacation, or even a down payment on a home. To help you save for any of these goals, you're going to start by figuring out how much money you'll need and then when you'll need it. Once you know the amount you want to save and when you want to save it by, you can then figure out how much you need to save every week or month. Other items you may want to save for include saving for retirement. This will ensure you have savings to cover your retirement years, and it is important, but it does take time. Or you may choose to save for education expenses. An emergency fund is a safety net that can help you cover unexpected expenses without breaking your budget and without having to take on expensive debt. Some people call this saving for a rainy day. When creating your emergency fund, it's important to consider all expenses so you can realistically allocate your funds. Here are some things to consider when starting your emergency fund. Individuals should aim to save at least 3 months worth of expenses to be safe. But if you haven't started your emergency fund yet, even setting aside money for 1 month is better than having no emergency savings at all. Families with two earners should try to have 6 months of expenses saved for an emergency, and families with only one breadwinner should have 9 months or more. Keep your emergency savings in an easily accessible savings account. Some important expenses to consider when you are setting your emergency savings goal include housing, food, insurance, transportation, any loan payments or debt you're working on paying down, and personal expenses like your phone. Now let's spend a minute talking about budgeting basics. Here are 5 steps that will help you put a spending plan in place to get or keep your finances on track. The first step in creating a spending plan is to know how much money you have coming in. Your gross pay, which is the total amount before taxes are taken out, could be substantially more than your net pay, which is the amount you actually take home. Second step is to make a plan. Now that you know your net income, you should forecast what you'll spend in the coming months. Next, track your spending. It's helpful to keep track of and categorize your spending so you know where you can make adjustments. You can track and categorize your spending by keeping and sorting receipts, writing down everything you spend, or even using a budgeting app. You also want to check up on your progress. It's important to see how you're doing on sticking to your spending plan regularly and adjust your spending or savings to keep on track. And then adjust your habits if needed. Now that you've made your plan, you can see where you can cut back on your spending. For example, if you switch from buying lunch every day to packing it at home, which could cost you half as much if you shop wisely, you could save $23 a week. That's a savings of over $1,200 a year. So let's recap some important tips to help you stay on track. One, be responsible with credit. Two, work to repay any debt. Three, learn and apply banking basics. And four, budget. For more free financial education, visit Better Money Habits from your phone or computer. Better Money Habits breaks down concepts in a relatable way to help you take steps to improve your financial life. Thank you.